The peak uncertainty from 2 weeks ago, 3 weeks ago, 2 months ago is fortunately in the rearview mirror.
Yeah.
If it comes back, we'll see. But ultimately, right now, there's whenever there's certainty in the market, the people that have money or that were waiting are now going to be ready to deploy that money, and that's what we're clearly seeing with at least convoys.
Alrighty, folks, I think it is becoming painfully obvious to anybody that is paying attention, but we are going to check just to make sure I am not nuts. And that is the fact that I think peak uncertainty is behind us. This does not mean we are out of the woods. This does not mean a recession is absolutely going to be avoided. But as uncertainty is lifted, what happens? Well, people start making moves. And I've talked to real estate agents and brokers across the country, and more than 80% of them have said demand is up. But you know what? That is real estate agents. I want to talk to brokers. I want to talk to people doing loan applications. And we're going to have this conversation with Dustin and Jonathan from Convoy Home Loans and figure out what is going on with volume. So, guys, what say you? Is uncertainty lifting? Are people making moves? What's going on?
Yeah, for sure. We would both agree. And John and I spoke about this on Monday as we kind of reviewed our April and just May pipeline. But we've seen quite a bit of uptick in consumer demand, consumer volume, applications being received, even people that were sitting on the sidelines, communicating with me and John 2 months ago, a month ago, et cetera, that as you had pointed out, the peak uncertainty from 2 weeks ago, 3 weeks ago, 2 months ago is fortunately in the rearview mirror.
Yeah.
If it comes back, we'll see. But ultimately, right now, there's whenever there's certainty in the market, the people that have money or that were waiting are now going to be ready to deploy that money, and that's what we're clearly seeing with at least Convoy's increased applications that we've seen over the last 2 weeks.
Yeah, the other thing about peak uncertainty be behind us is it's also intersecting with the stock market at all-time highs. And obviously, if we go back to Liberation Day, we go back to that just chaotic reciprocal tariff announcements, we saw a stock market that cratered. And the thing that happened in real estate, obviously, is for a lot of buyers, their down payment was coming from their stock portfolios. So that immediately shut off demand. Now, fast forward 6 weeks or whatever it's been, stocks are back to all-time highs or near all-time highs. And the other thing I learned about consumers is once they lose a decent percentage of their paper net worth and it comes back, they are often motivated to get that wealth out of stocks into a physical thing like real estate. So I think we also have consumer behavior going, ooh, that loss of wealth hurt. I don't want to do that again. Let's make a move. What do you think, Jonathan?
Yeah, absolutely. And I think sellers are actually reacting that way as well a little bit, right?
Sure.
They went through a little bit of the hurt. Now, homes that have been listed and sellers are like turning away offers, saying, no, I don't want less than this, are actually accepting offers, right? I
Yes.
think that's the other side too. So we're seeing a lot, again, like Dustin said, clients that talked to us 2-3 months ago, even sometimes longer than that, they come back and they give us the same property that, hey, I finally got it under contract all this time, post the craziness. And I think the sellers kind of are starting to come a little bit to reality as well, just as so much the buyers are as well. Yeah.
No, I think more inventory, longer days on market. As I've said, you guys have heard me say this. This is the year of the investor. What does that mean? That means knowing your numbers, getting fixed rate debt, cash flow day one, and writing lots of offers and following up. The money is made in the follow up. So it does not surprise me that you guys got rock star participants that are going, hey, I finally got property XYZ for my price. Right? It took 4 months longer than I thought it would, but I got it. And when they do, they're going to make those moves.
Yeah, absolutely.
Yeah. The other thing I think that's really interesting, and I think you guys brought this up to me 2 or 3 weeks ago, is interest rates today are roughly the same as 2 years ago. So we no longer have buyers going, I remember 4%. Frankly, we don't even have buyers saying, I remember 8%. They're like, I remember 6.8 and it's 6.8 today. So,
Yeah.
that is also helping because we don't have this anchor of too high or too low. So that's also going on. Yes?
Yes.
Yeah,
And I
you
think the
hit that right
biggest,
on.
yeah, the biggest thing again for clients, like this is the waiting thing. We've talked about this like probably a million times is if you wait, right? And people are like, well, I'm waiting for rates to go down. Today they're saying that, right? Now.
Right.
So I'm saying if you're waiting for rates to go down, and historically speaking, last 2 years ago when Trump was supposed to be the savior and come and drop rates, we're exactly the same where we are right now. What else are you waiting for to bring rates down to a certain point for it to make sense, right? Because if it makes sense for you, guess what? It starts making sense for everybody on the block and their mom, which means that more competition, more people going in.
Yeah, this is the year of the investor. So what do you think, Dustin? Again, the fact that rates are roughly the same for 2 years now really takes that away as a barrier, I think.
Yeah, no, 100%. Because if you look back at it for the last 2 years, we've had what, up or down 25 basis points, give or take, for the last 2 years, maybe even longer. We've had little blips where it's been an overnight knee jerk reaction for 2 or 3 days where it's went down half a point, but you probably couldn't lock it, or it went up half a point, but obviously didn't lock it when it went up half a point. But the biggest thing is that what you just said is we don't have that anchor. Whereas 2 years ago, the anchor was still there because people remembered force. So now, if you've been sitting on the sidelines, just like John said, what are you waiting for? I wouldn't say you've become bored, but some of our investors, some of our clients, I wouldn't say have become bored, but they've become complacent with where the market is, that they now realize, okay, now I got to just start underwriting this at 6, 8, or 7% and take what's out there.
No, and I think that just leads to a healthier market. Again, at the end of the day, 2025 is the year of the investor. More inventory, more motivation. Make sure cash flows day one. Right. Let's roll into product, because I think one of the things that's interesting now is we are having folks like Convoy and the folks that you work with create products that are right for the moment. So talk about new products that come out. We talked about, I think it was a 5.8 last week or something. Don't know if that's still around, but creating products that are right for the moment is a good idea.
Yeah, absolutely. 5.8 right now. They obviously, from a rate sheet perspective, don't update like as quickly as conventional does. So obviously we've seen the yields kind of shoot up like crazy again, right, over the last week. So I don't know if it'll be around come next week or if we can even lock it later this week. But as of right now, it's still on the rate sheet. And then in terms of new products, though, we're starting to see more investors, and by investors, I mean like the Wall Street hedge funds and the people that are buying loans, trying to reward experienced investors. Ooh. And the way that they're doing that is we had a couple meetings with them, and they said that they want to target investors with like more than one property with 12 months of history that they've owned it, and with a debt coverage ratio above 1.2. And for those investors, purchase money, rate and term money is starting to get insane, because we priced something out yesterday. It was 80%, like 20% down. It was a 1.35 DSCR with a 5-year prepay, and the starting rate was a 6.3.
Wow.
Without buying it down.
Wow. Where could you buy it down to, you think?
The floor right now is like 6.1. Okay. So the reason though that they did that is because if, let's say, the client is not wanting to buy it down further, add extra costs because they're doing 20% minimum down, it still improves their cash on cash, so we've kind of put more emphasis on the no buy down rate instead of the buy down rate, because a lot of the clients that we've been seeing have been wanting more options that are more aggressive without the buy down. So
I like it.
Yeah, that's kind of what we've, obviously less cost for everybody, but 6.3 at a 1.3 DSCR, is kind of like it's a crazy, market deal right now for experienced investors, especially for those clients that are looking to make sure that if I buy something right now and let's say the market dips a little bit, which if it goes to like 6%, am I going to be angry? It's like, no, you're not really going to be angry if you're at a 6.3, and it's not going to be worth refinancing. So I think that's the main target right now that's getting the most. Another product, like if you're not in that like as much experience wise, but you're still doing 20% down. We have other funds that are now being like pricing at mid 6, right? So
Wow.
that was a specific one. So 6.5, 6.6 without buying it down. That is another option for lesser experience, but still 1/1.2 DSCR. And that's another great option for that's below the market, because most 20% down DSCR right now is sitting at 6.9, right? 7.1. Yeah.
Yep. Yeah, so it's really interesting. Again, one rental at a time attracts obviously experienced investors, and if the barrier is one property with a tax return year, I think you're going to have a lot of ORaaT fans kind of reach out to you and say, "Hey, tell me more, tell me more, tell me more." So if they wanted to get started on something like that, what do they do?
Go to convoyhomeloans.com and let us know you came from ORaaT.
So folks, go to their page. There's a little blue box on the left that says more details or start now or something. Click that. On the bottom of the screen, there's a drop-down list that says, how'd you hear from us? That's where you have to say one rental at a time. When you do that, you get one of these two guys to help you. If you don't do that, I can't tell you who you're going to get, but it won't be one of these two guys. Thank you guys so much. Have a great week.
Thank you.
you.